Hello traders, and welcome to Trade Your Way. This is another great video talking about strategies, specifically the 764 strategy, which we are going to share with you today. Stick around because we also have some setups potentially on pound dollar, so I want to share that with you, and that is going to be using this 764 strategy. So let me walk you through it, give you some examples, show you one that we recently did for 150 pips, just over 2% in terms of profit, and and also then you'll be able to understand it and apply it to what's about to happen over the next week. So without further ado, I would say keep an eye out on the next video that's going to be uploaded on our YouTube channel. Subscribe, and also listen to the podcast because there's a lot on trading psychology, all free of course. But yeah, without further ado, let's dive straight in. So let's give you some examples. So let's pull up this pound dollar, and then what we'll do is we'll revisit it. We'll go back into it so you'll fully understand it. So right now, we are sitting at the 76.4% fib, a key fib level, having tested it 3 times. And note, this is a 4-hour time frame. This is current. It's the weekend of Saturday, 21st of November, and it is about 8 o'clock in the evening. So the market's opening in about 24 hours time. So this is current. This is happening now. And this is why this strategy is called the 764 strategy, because it is using this key fib level. It's a very powerful fib level. It is, in fact, the last fib level that we encounter before we go fully retracing up, in this case, to the 100%, and so making a full retracement. So we apply the Fibonacci Retracement tool, and on there you'll see other key areas, which key levels that I use. So 38.2, 50%, 61.8. Note that you add 618 and 382 together to equal 100%. So that's how we carve that up. Obviously 50% is your halfway mark. So yeah, so right now, pound dollar sitting here. So what do we want to do? Well, what we want to do here is we want to take a trade off this 76.4. We want to potentially, if it doesn't break on the 3rd attempt and go short here, we want to put our stops just above, and we want to short it down to the 61.8, and that will be the first sort of target area, which is down at around 132. So we could say from around 132.90 area, depending on entry, you're looking at a good 80, 90, potentially 100 pip move back down. So that's what we're looking at, and the risk to reward is pretty decent on this, because you're probably looking at maybe a 10-20 pip stop loss just above all this noise, and targeting sort of 80 pips. So yeah, maybe potentially a 1-to-4 at least risk to reward ratio. So very good. So the good thing about a 764 strategy is that it could also be the start of a reversal. And so what happens there is we get in here, it's done all of this, it's gone up, it's tested 3 times, fails, and then this is the start of a bigger move down. Alternatively, the beautiful thing about this strategy is that if we break on this 3rd attempt, if we break up, we know that we're going to be looking then to go and do a full retest and potentially even then extend up. So first target would be 135, nice round number, and then we would look for the extension levels, a 127.2 extension. So 127.2 extension, which is 137.03. So it's about 400 pip swing up. So some really good potential upside targets should it break this level. And so the beautiful thing again about taking a trade off this 76.4, in this case flexibility allowing us to look at it both long and short, would be that we still place our stops below the the biggest spike down on these last 4-hour candles or 1-hour candles, which you can drill down to. So you can use the 1 hour, the 4 hour and the daily to look at the price action. So in this case we'd look at the 1 hour, and we want to look at this last recent swing down, which takes it down to about 137.60 area. So you could argue that we're going to put our stops below that area, which would give us maybe about a 30 or so pip stop. So you don't really want to be looking for a big stop loss. But remember, in any case, whatever we trade, however we trade, we're only ever really looking to risk 1% of our capital. So if you divvy up that 1% on, using say a 30 pip stop loss, it's still 1% regardless. So whether you have a 30 pip stop loss or 40 pip stop loss, it's always going to be 1%. The only difference being that the lot size will be reduced as the stop loss is greater. The greater the stop loss, the lower the risk per pip. And so what that means is if you make 50 pips at 5 lots as opposed to 50 pips at 10 lots, obviously the profit is going to be considerably different. So that's the only difference. But remember, with this 764 strategy, we are looking at using it in conjunction with other confluences. So in this case, we will plot a trend line here, look at the last swing low down to about 60. We're going to put our stop loss somewhere down here, and if it breaks up here and starts going long, then we would be quick to look at taking some profit on the first target up, which, if you're intraday trading, day trading, it could be it could be double what the stop loss is. So you're getting a decent risk to reward ratio of at least 1 to 1, which makes it worth your while. Generally speaking, we go for 1 to 2 as a minimum. So as our T1 is going to be, say, arguing it might be about 30 pips, we'd be looking at 30 plus pips for our first target to at least generate, like I say, at least a 1 to 1 risk to reward. What we also do here is we look at the range, we look at the last swing low, we plot our fibs, and we'll look for the retracement, which would be down at this support area and 38.2 and previous structure. So we look for multiple confluences. We're pretty flexible when it comes to the confluences that we're using, because it just depends. Every trade, every chart, every setup is different. It varies, but the key to this strategy is acknowledging this 76.4 fib level and trading off it. Now, whether we are entering a trade here to go long or short, it's that's up to us. It just depends what the market wants to do. Also, alternatively, if it does bounce off this area and does break this trend line, then we would look to short it, and our first target could be to the 76.4. So trading away from the 76 to the 76, if that makes sense. So we would trade here, put our stop just above, so very, very, very small stop like we just said, and our target area would be somewhere down here at 132.20, which gives us about 60 to 80 pips depending on entry, and our risk is something like 20 pips. So again, as I said a little bit earlier on in this video, it was about a 1 to 4 as our first decent target. So that's what we do with regards to the 76.4 in terms of buying and selling off it. I've gone into quite a bit of detail there with the pound dollar, because this is a current setup that I'm quite excited about. We have Brexit in the pipeline and trying to sort the deal, so it's quite exciting to see what happens next. Now, I want to share with you this trade. This was a trade that we took last week. Let's talk about a week. It was an impulsive move, so we were looking for the correction. This was to do with the COVID vaccine, and so we had this pump up. And because it was an unprecedented piece of news, this is what happened with the market. This is why it pumped up. But clearly with this pump, it's an impulsive move, and so we were looking for the correction. So after looking at pennant and wedges and various other shapes and patterns, trading patterns, and monitoring the price action, we were looking again for the third time to test a key area of support. So in this case, the trend line support. So third time. This is on a 1 hour time frame. Again, looking at it on a 4 hour time frame, we were monitoring the price action, and so we drill down to the slightly smaller time frames. In this case, a 1 hour. You could use a 15 minute or a 30 minute, just to see what is happening with the price action. And you don't want to go too low down. You don't want to use a 1 minute or 5 minute really. You want to be keeping 5 minute at best, or at worst I should say, maybe. But generally you want to just keep an eye on what's going on the high time frames, like a 1 hour. and then we saw here that it broke, so we shorted at 105.30 on the premise that it was going to break, and it did a classic break and retest. So what was acting as support was now acting as resistance, and then off it went. What was our first target? Well, 105.30 was the entry. We were looking at for around number area 105 for about 30 or so pips. You knew you may get some sort of a reaction round there. Ultimately looking for our 38.2 to see what would happen there and monitor the fibs as we go down. But ultimately we were looking for the 76.4 as a target, and that is what generated 150 pips. Or 2%, because our stop loss was way out the way. It was, in this case, it was just to allow for the noise, and just in case it rejected up here. Our stop loss was up here around 106 for about 70 pips. But as soon as it broke and retested and dropped down, I was quick to adjust the stop loss, because I just thought, well, this is going to go down. This is an impulsive and corrective move. Now we're in a corrective phase. So I brought the stop loss down to, I think it was about 15 pips, less than 15 pips from our entry, so the risk was greatly reduced. And then when it hit our T1, I put the stop to break even, and then it never went back and never touched it. And just to show you again, how that played out. This is what we shared on the 12th of November in our trading group, one of our trade groups that shares all the analysis and the signals. 105.30 short, T1 105. T2 103.80, so 150 pips, roughly a 1 to 2 risk to reward ratio. But even here I did say we'll look to adjust the stop loss if price can break the trendline support. So it was testing that support, and then it broke. And this is how I always trade with two targets, so we can always take partial profits and bank some along the way. And so yeah, it worked out really well. And just to share with you what the trade looked like on its journey. So this was the trade in play. It was quick to move the stop to break even, and just hold it for 103.80. Now why 103.80? Because that's the 76.4 area, which was just below at 103.77, I believe. So we watched it play out. Beautiful move down, and and just waited. Didn't really need to do anything else, and just let it play out. And then you saw that by the time it got down there, it hit our area, our T2, our target, final target, and spiked down, wicked down in fact, and hit our target and bounced up. And it was a really nice trade. So that's us using the 76.4 as a target and applying the 76.4 strategy. And so it was a really good clean trade, good clean move, and giving you two examples there, one which we've taken, one which we're looking to take, and hopefully that gives you some idea of what it looks like in terms of when we trade. Again, this is that dollar yen trade that we were looking at. I was just monitoring it off my phone. That's all I had to do really. There was nothing else that needed doing. We'd already marked up everything. We were in the trade, and we're just monitoring these key areas, these fib levels. And sure enough, you saw that when price did actually get down there, you see that it just parked itself there for the rest of the week. So this was on Thursday, I believe. And it's just Thursday and Friday, just consolidation, bit of range bound price action, but it pretty much on point with the target. So we're now looking at the pound dollar to see what that's going to do next, and that is of interest. So hopefully that does help you. In terms of rules, well, we do have some rules here that we will share with you, and a breakdown exactly of what it looks like when it's written. We have got it here as well. I should say on our website in terms of strategies. So I don't know if you can see that, but it does have a breakdown. There's nothing complicated about any of our strategies. They're really easy to follow. I think they're sometimes too simple to follow. I think we try and be to the point, no messing around. But I think people want to look for something a little bit more elaborate and long-winded, where they're looking for something where there's 10 steps that you have to follow, and make it feel very comprehensive, and thereby making it feel like it's very important when it doesn't need to be. Trading just needs to be clean and in its simplest form, and you know, this is what we look to do, and this is what we look to provide. And obviously we've been trading for a very long time, so yeah, let's I don't know, it's gone a bit wonky there, isn't it? Oh, there we go. Yeah, so hopefully you can see that, and that is pretty much long or short at the 76.4 fib, incorporating the 3-option rule. Now I just want to go over the 3-option rule very quickly, and quite simply, what is a 3-option rule? Right, well, with the dollar yen, we were looking at the price action to come down, you know, put in a retracement. Now, the first option to this 3-option rule, and hence the name Fibonacci Retracement, and that's the name of the tool. What we're looking at, the first option would be that it would retrace to one of these fib levels, the 38.2, the 50%, the 61.8, or the 76.4. It would hit one of these levels, and that would, you know, that would be its resting place before it goes on up. Now you saw here it got to about 50% before it bounced. We had a bounce again, that was news related, with the vaccine related news, which just gave us another impulsive and corrective move. It was a lot smaller second time round, but still same principle. So anyone who missed this trade could have got in around 105.10 for this trade, which could have still given you about 50 or 60 pips just by trading these impulsive and corrective price actions down to that 76.4. If I just show you that very quickly, without trying to go off on a tangent, but look at the way the price action is. Look at how look at the way the price comes down to rest at that 76.4. Even on this smaller range of about 60-70 pips, it just comes and sits perfectly, neatly, before it continues on its merry way. But as a T1, great, 104.50 area, getting in at around 105 for about 50 or so pips. So make some money there. Could have gotten in there. Could have gotten in on this test and break down. So that's, you know, that's the first option. The second option would be that it comes down and puts in a full retrace 100%. Third option is that it goes down and hits one of those extension levels and makes a new low. And so they're the 3 options that we look at, hence the name, the 3-option rule, which we can talk about in more detail. The stop loss can be relatively small using this strategy, and can be placed slightly above or below the 100% level, or depending on where the 76.4 is, you could just place it above or below that level if you're buying or selling, going long or short off that level itself. And as we say, it could be the start of a reversal in the market, so it can prove to be a very high yielding pip strategy. So the other alternative was that it's long or short to the 76.4, which was that dollar yen trade. So taking trade to it, and then obviously the pound dollar I showed you is the trade that we're looking to take off it. So very flexible strategy that allows you to encompass the 76.4 fib. It's a key level, and we can go short off it, we can go long off it. Stop losses don't necessarily have to be huge. It's just a fantastically versatile strategy. So I really hope that helps. I was going to go into a lot more detail, but I realised that, you know, we're 19 minutes in, and I wanted to keep this under 20 minutes. So I really do hope that this video helps and it's not too long-winded for you. And yeah, I hope that if you have any questions about any trades relating to that 76.4, you want to learn a little bit more about the Fibonacci's, we do have a video on Fibonacci key levels, and you know, helping us to understand why this one is in red and why it's so powerful and why we utilize it. And there is one here that does answer those questions in a little bit more detail. So be sure to subscribe, and I'll see you guys in the next video. Thanks for taking the time to listen. All the best.